Hello, YouTube. I've been hearing a lot about a stock market crash, so stay tuned. And in this video, we're going to talk about why I think a lot of people don't understand the truth. And the truth meaning that fundamentals tell us what go on the watch list or the direction of the market, but technicals tell us when to buy and when to sell. So yes, there are many reasons for us to be bearish right now. Let's go through them really fast. Moscow, great, right? Looking at more offensives, nice. Financial markets have more confidence than we do inflation will come down. Kashkari. That's Kashkari. Most of my colleagues think over 5 for a long time. And we also have Williams telling us that monetary policy is barely restrictive right now. We also have the White House saying the balloons have been spotted over across 5 continents. U.S. has been in touch with many of them. And what happened? We went from extreme greed at 77 down to 73. And a lot of stocks are still in the double-digit club so far this year. Amazon up 11, Visa up 10, Apple up 16, Nvidia up 50, Google up 11, Microsoft up 10. And if we look here too, what I think is important is a new psychology chart we basically pointed out yesterday. Look at the pattern here. Slope of hope, the wall of worry. And if we now look here to a company like Google, where you're like, oh my God, Justin, Google had a crash landing today to 100 to the cent. Yes. We had the slope of hope. We had the wall of worry. Then we went higher, and now we've come back down. So we're right here, right back to the top. And this is a buy the hype, sell the news. On the flip side, we have companies like Nvidia, which are absolutely pumping after going through the slope of hope, getting through the wall of worry, and then they just go higher. So I'm not sure where individual stocks are going to go, but when we look at an index level, meaning for the S&P or for the NASDAQ, let's look and see what this means now, because understand all this. And let's also look here to our options. This is our platform. Link in the description if you want to find out more. We're looking for orders over 100,000 for the last 30 days, going back to January 9th. We look at our overview, and I'm noting that there's still a lot of bear fuel in here. Tesla puts 5 billion, calls 1.3, Amazon 1.3 billion in puts, Amazon 400 million in calls. And I think Tesla's had a pretty good year so far. Yep, it's booming, baby. It is booming. So it's bear fueled until it's not. So with all that news, I just told you all the reasons fundamentally we should not be bullish on this market. What do we have technically? With the reminder that fundamentals tell us what go on the watch list, but technicals tell us when to buy and sell. And it is okay to be wrong. It is not okay to stay wrong. We mentioned that during the NASDAQ rally, and it's what I still believe right now. So let's jump in. And like I mentioned, if you stay tuned all the way till the end, I'll also even give you the update for what I'm looking at specifically for us to start a crash. So what do we have here? If you're watching this channel, it means you appreciate technical analysis. So let's look at the weekly technicals here. We have an inside bar. Okay, so we have a weekly inside bar, and we've bounced off our January high, which means we're in expansionary territory. Yes. And now we have an inside bar with sellers showing up or the upper wick. Correct. So for there to be a stock market crash, we have to either take out the low from this week below 400, and then we need one more candle to also confirm. We have a set of lower highs and lower lows. There is no pattern with one candle. We need sets of candles or multiple candles to confirm that pattern. So right now, we are consolidating after a massive expansion, and we're set for our third weekly candle close over the 50. I think that's pretty bullish. Then we look here to our daily chart. Okay, well, we also have an inside bar here on the daily. Here's where it gets really important. Stick with me. So once we get over the 50 DMA, pop, flag, bounce off the uptrend. Pop, flag, bounce off the uptrend. Pop, flag, bounce off the uptrend. Why is this important? Well, it's important because every previous time that we've reversed, we have a red day, we have a higher low, then we advance for a higher high and then just push higher. That's how we get the pop. So we're due for a pop right now. Going sideways is likely going to lead to a test of roughly 400. Why? That's where support's found next. That's our weekly low, and we haven't really truly tested this area. Actually, no, sorry, we have right here. So it'd just be, that would be a weekly back test. We haven't tested it this week. So if now you understand what the S&P is telling you, it's telling you it's consolidating over the short-term price, which means it's going up in the short term. That's literally what the 50 MA means. If you have this line in your chart, make sure you understand what it means. Now let's look at QQQ. All right, so QQQ here, what do we have? Well, same thing. We have an inside bar over the January high, which means we're in a monthly higher high. We have upper wicks here on the weekly with an inside bar, which means we're consolidating. Consolidating after a massive pump higher than we did on the S&P because we're over the January high, and we're actually set for our second weekly candle close over the 50 if we can hold 300 into Friday. And we now have our fifth weekly candle close over the 200. So we've pushed up 20% on the NASDAQ, and now we're flagging out a little bit. I call that a bull flag. Why? Well, bulls are starting to take control. We'll see whether or not they hold it into Friday. But now let's look at the daily chart for QQQ. Same kind of thing. Pop, flag, pop, flag, pop, flag. Are we due for another pop? Yeah, if we're going to move higher, like we're due for the pop right now. Red day has less volume. It's also bullish. And we look here to our pattern. Low, higher, low, higher, low. And then we form a higher high. Okay. So if the inside bar breaks bullish, that's bullish. Correct. By closing at the low of the candle, it also implies downside pressure. So it's kind of equal right now. But remember, on the weekly, for the NASDAQ to technically be bearish, in my opinion, there's the caveat, we have to take out this low. This low on the NASDAQ right now is at 390. We got to drop by 15 points in 2 days. Or we have to hold this weekly inside bar. We have to open up next week and print another lower low. That would give us 2 candles at the lower lows. And it would give us one lower low, which means we'd be starting to reverse. That's the opposite of what we saw down here at the bottom, right? We see the lowest low, higher high. Now we start advancing. We start expanding. It is literally that simple. That is the truth, the stone cold truth in literally a couple of minutes. Shouldn't take 20, 30, 40, 50 minutes to explain this. Why? This is simple stuff. Thinking harder is not going to make the charts easier for us to understand. I want to point out one final piece of data, and then I'm going to leave you with the action plan I mentioned before. Here we go. DXY. Remember, the dollar is inversely correlated to stocks. So right now, the dollar is up by about 0.5% on the week. The NASDAQ right now is down by 0.5, and the S&P is down by about 0.4. So if we have pretty good confidence on the market right now, where S&P and the NASDAQ, based on we're over the average, the short-term price, we're consolidating over the January high, which means we're in expansion territory on the monthly, and our daily tells us we're due for a pop. That's all correct. But if we start going sideways, it means the momentum we've been building up since the beginning of the year is starting to fizzle. And that extreme greed is now just turning into greed, where now sellers are getting flushed out and short sellers might want to re-enter as a revenge trade. It's what everyone seems to want right now. They don't just want this move lower, they need it. And when you need a trade to work out, it rarely does. So let's go back here to the dollar and just ask ourselves whether or not, if this thing is potentially the reason why we're down today. If we look here, okay, so S&P is down by 1% adjusted. The NASDAQ is down by 1.8. Well, yes, that's called mean reversion, where we got extended yesterday on the daily, right? We get extended yesterday, then we revert back to the mean today. So the dollar didn't really move that much. Yeah, that's right. The S&P and the NASDAQ got ahead of themselves, and now they're mean reverting, right? We get over the 50, we come below the 50. That's what happens over time. It's called mean reversion. So if we understand that, the S&P and the NASDAQ are the two things that are very important. All right, let's look and see what we got here. Well, we're below our 50. We're below the short-term price. We have a double head and shoulders pattern, shoulder, shoulder, head, shoulder, shoulder. And we're trying to stage a reclaim of our uptrend. It also happens to correspond with a key relative high going back to 2016. Last time the Fed was hawkish, just like in 2020. So if we look here, okay, we have to reclaim the 50. We have to reclaim the uptrend, the 50, and then get above 106, 106.56, but really about 109 to confirm this reversal. This is called the dead cat bounce. It is trying to go up. We have a bullish engulfing candle on the last week. We have continuation. We're closer to the high of the week than not. So the dollar is giving us some pretty big clues here. It's trying to dead cat bounce, which means you're trying to bottom fish this. You're trying to top tick the S&P without confirmation. What is confirmation? A couple of candles with lower highs, a couple of candles with lower lows. When we're at least below the short-term price. Again, it should not take 20, 30, 40, 50, 60 minutes to explain that. This is simple, basic technical stuff. All right, Justin, move forward. Tell me about the cheat codes. Here we go. We got those cheat codes for you. Here we go. Here's a chart which I think has fundamental reasons to go lower and technical reasons. You were looking at China or FXI. What do we got? We got the big old balloon. I showed you the headline. They're now across 5 different continents in 12 countries, 12 allies. This doesn't seem like a weather thing. So fundamentally, I don't trust these guys. I've never really trusted them. I trust them even less now. And then technically, do we have that pattern I just laid out? Oh my goodness. If I would have just waited for the lower highs and the lower lows, I could have gotten in. That's right. I actually shorted FXI last week. That's right. When what? When we blew the low out. Why? The trend is starting to reverse. Is it confirmed? High, lower high, lower high, low, lower low, lower low. So for 2 candles, we have lower highs. For 2 candles, we have lower lows. But we're still above the short-term price. What does that mean? I trimmed my short to make sure that I'm not caught offside. But the rest of it, I'm willing to let ride. So if you're looking for a pattern that has fundamentals and technical reasons to go short, and you're so desperate for a bear move, watch for the S&P to do what FXI is already doing, or for the NASDAQ. If you don't want to short China, look to EEM or emerging markets. There's a fundamental and a technical reason to be short this one too. Why? Adani, right? Lost half his net worth on that short report. Oh my God, India seems uninvestable. That's right. That's the emerging markets. What do we also have? Well, right at a key area, just like on FXI, support turned into resistance. We failed on the pattern. It's still a big bullish inverse head and shoulders, but at least in the last 3 weeks, meaning the last 3 candles, high, lower high, lower high, low, lower low, lower low. But we're still above that 50 MA, and we're right here on weekly support at about 40. So the truth is that the more you think does not mean you're gonna convince the chart to do what you want. Simple stories are usually the right stories. If you enjoyed this video, I would really appreciate if you could drop me a comment and let me know what you think about it. I spent more time recording this video to make sure I could give you a jam-packed video with a lot of value. Thank you so much for watching.